I'm Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, October 18th. We'll start today's report by taking a quick look at the week's market activity. For the fund flows trading week ended with the Dow Jones Industrial Average closing over 23,000 for the first time ever. Overall on the week, the Dow was up 1.2%, with the bulk of the gains occurring on the last trading day as the index increased about 0.7% that day. IBM was driving the Dow that day. The IBM experienced its largest one-day percentage gain since 2009, thanks to a better-than-expected earnings report. Overall, the Dow is going through some boom times. They're up over 19% for the year and over 26% since election day of 2016. We're seeing similar numbers for the S&P 500 index. The S&P is up 0.2% on the week, 14.4% for the year to date, and approximately 19% since the last election day in 2016. While the Trump administration has some issues pushing their agenda through Congress and has seen their share of controversy, they've sure been good for the stock markets since they've come into office. All right, let's turn our attention back now to the fund flows activity. We'll start by taking a look at our fund macro groups. Equity mutual funds saw net outflows of $7 billion last week. Taxable bond funds took in about $2.8 billion in net new money. Muni Bond funds had net inflows of $351 million, and money market funds had net inflows of roughly $5.1 billion. We'll take a closer look at each of the fund macro groups now, starting with our equity group. We'll talk about equity mutual funds first. As previously mentioned, they saw net outflows of $7 billion last week. It was their 17th straight week of net outflows. Once again, domestic equity funds are responsible for all the net outflows at $7.9 billion, while non-domestic equity funds took in $935 million in net new money. You'll see on the slide there's a bit of a typo showing a net outflow for non-domestic equity fund. Please disregard that. It's actually a net inflow. Overall, equity mutual funds have had net outflows of roughly $90 billion for the year to date. The major players last week on the domestic equity side was large cap core funds with net outflows of $4.2 billion. And on the non-domestic equity side, international multi-cap growth funds took in $244 million in net new money. Let's move on to our equity ETF group now. This group saw net inflows last week. They took in about $12.3 billion in net new money, pushing their year-to-date net inflows to roughly $206 billion. The largest net inflows last week amongst individual ETFs belong to the SPDR S&P 500 and the iShares Core MSCI emerging markets products, which took in $4.6 billion and $1.4 billion. Conversely, the iShares Russell 3000 products saw roughly $360 million leave their coffers. Let's move on to our taxable bond fund groups now, starting with mutual funds. Net inflows for this group as well last week, about $2.8 billion. This pushes their year-to-date net inflow to roughly $155 billion, which puts them on pace for their largest annual net inflow since 2012, when they saw about $258 billion come into their coffers. The major contributors to the net inflows last week were the Core Plus bond funds and the Core Bond funds peer group, which took in about $850 million and $640 million respectively. Let's move on to the ETF side for taxable bond funds now. Once again, net inflows here for this macro group took in about $1.2 billion last week. It's their 15th straight week of net inflows and puts them up $92 billion for the year to date. This would be an all-time high for the group if this were to hold. The major contributors to last week's net inflows were the iShares Core US Ag and the iShares iBox investment grade corporate products, which took in about $609 million and $534 million respectively. And the iShares 20-plus year Treasury product saw roughly $362 million leave their coffers. Let's move on to our next macro group now, Muni Bond funds. Net inflows once again for this macro group took in about $351 million last week, pushing their year-to-date total to a net inflow of $19.9 billion. The largest net inflow amongst the peer groups last week belonged to the high yield muni debt funds peer group, which took in about $210 million in net new money, pushing their year-to-date net inflow to roughly $6.4 billion. Last group to take a look at is the money market fund peer group. Net inflows here again last week took in about $5.1 billion in net new money, with two institutional peer groups taking in the most. The institutional U.S. government money market fund and the institutional money market fund peer groups had net inflows of $4.4 billion and $1.5 billion respectively. Well, that does it for this week's report. If you'd like to take a closer look at the data yourself, please join us at our website, which is www.lipper.us.fundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.